Alrighty. I was about to say it's about broadening formations, but it's like right there. Today we're talking about broadening formations. I need this out the way. Here we go.
Hello again, my friend. This is the Quant Edge 4-week coaching program, week 3 on broadening formations. I'm Rob Smith of the In the Black Quant Edge VTF here at T3 Live. And as we move along here, the first video in week 3, as you peruse the disclaimer one more time, I want to be very clear as we start this section. If you are unclear about the previous two universal truths that we talked about, the actionable signals, what they look like, and time frame continuity, I would stress that you would go back and you would watch those again before even attempting here. This is where things get a little more challenging to understand. And so you want to have a full and complete understanding of what the actionable signals are, what they look like, and the importance of time frame continuity as it applies to them, because the broadening formations are going to get a little tricky. But once you understand them, as you're going to see today.
So I'm gonna just stop it right there since I know that April is fairly new to it. So I'm gonna just give you a quick rundown, right? So we're seeing a one on any time frame, right? If we're seeing a one bar, that means it's enclosed inside of the previous candlestick. It has not passed, it has not broken the previous high nor the previous low of its candlestick, right? We're not talking about like super high or swing highs or swing low, just its previous candlestick, right? A three bar now, for instance, has broken the upside and the downside, or the downside and the upside. However, it's always broken both sides of the direction of the high and the low of its previous candle. And that's why the three bar, you can also look at it as an engulfing candle, right? And now when we're looking at the two bars, right? The two bars are what we really like to trade, right? That's why we're looking for the next two. The two bars are going to be your directional bars, right? Is letting you know where the direction of the price, where it's going. And I would say where it's heading. However, the liquidity is like a magnet. It kind of tells you where it's heading from there. As he talks on the chart, if I pull up my chart, I'll show you what liquidity is, right? So the one bar, once again, is an inside candle, is basically is represented as consolidation. Most people will look at it like, hey, it's choppy. However, it's not that it's choppy. It's still inside of the previous candle on a higher time frame. That's a larger range, and it still hasn't broken out of that range, right? Um, so if you're used to playing support and resistance, when I'm talking about a range, we always want to buy the bottom of the previous candle, or whatchamacallit, sell the top of the previous candle if you're like quickly scalping or quick little day trades, right? Utilizing a bigger time frame and coming smaller, right? So inside candles are consolidation, right? Two candles are directional candles of what we trade. Three candles are what's setting up the broadening formation of what we're talking about now. So that you don't get confused, since this is a price action strategy, right? Look at the three bar, right? Now that you're learning about broadening formations and it's what it creates, it just think of one price action. Um, Utilizing a bigger time frame too, because this is how the mind understands it. Whatever time frame you're on, let's just say a 5 minute, you see a three bar, just go ahead and draw a triangle. You'll be able to see it. And it's always even better when the previous candle is it's always going to be broken off previous high, because you're charting it from a three bar, and it does not have to be on a three bar once you start to learn this. However, you want to connect the previous high of that three bar, right, to the three bar, and the previous low of the three bar, the previous candle, and that three bar, and that's how it becomes that triangle. And that's what we're going to get into today, right? Now, real quick, time frame continuity, right? It's just as we trade, and it's not just as traders, straters trade. It's how even institutional traders trade. Well, great institutional traders trade, and as well as retail traders, that know what they're doing. So please do keep that in mind. It's not just a strat strategy. It's like if anything that you're doing in life, you're always gonna look left and right, whether you're crossing the street or anything that you're doing, right? You're gonna want to know what's going on, and that's what your time frames are, right? You always want to check your neighbor and make sure, hey, this is time to go outside. Let's just say it's lockdown because it's COVID-19. Hey, can we go outside or not go outside? Things of that nature, right? You just want to always check with your neighbor, or let's just say your parents live next door to you, right? You just want to check with your parents and your siblings and things of that nature to make sure that everybody's seeing that the trade is going in that direction, right? Because maybe you're playing the 5 minute, maybe, and you have, let's say, $1 billion to deploy, but you're deploying it by small sums of capital, and then somebody's on a 15-minute time frame, then you probably have somebody over here on a 3 minute time frame, right? Just make sure that you're looking at your neighbors so you know what that move truly is, right? So me breaking it down that way, that's called time frame continuity, right? And all you need is about 4 to 5 time frames that's going in the right direction, right? Whether they're bigger time frames from each other or right next to each other. That's what time frame continuity is, and can't remember if he spoke on something else.
That's where we can gauge the magnitude and what signals we want to take, when, why.
I'll rewind that real quick. That was important.
Going to get a little tricky. Once you understand them, as you're going to see today, that's where we can gauge the magnitude and what signals we want to take, when, why.
So when you hear us mention the word magnitude, magnitude just means target. However, when we say magnitude is our highest target that we can be able to take out or that we're projected to take out on a higher time frame, and then we have smaller targets on a smaller time frame. So we'll always say magnitude, and we know that, hey, whether we're playing the weekly, we know it's the weekly's magnitude. However, we got other targets once we start to break down the candlestick.
So for today, table of contents. First of all, we're going to prove the proof of broadening formation. We're going to prove they exist. Then we're going to look at actionable signals combined with the broadening formations. How the broadening formations become support and resistance, if for lack of a better term. Have time frame continuity with the broadening formation, so we can start slowly putting everything together, right? When we combine these outside bars with actionable signals, as you see the importance of the outside bar. Using broadening formations to time the actionable signal triggers. Then a little bit on how to draw them, and then we're going to get to the end, and then we're going to get to some more live charts. So, what are broadening formations? Broadening formations are any series of candles where both highs and the lows of the previous range are breached. Right? So you'll have one bar, a range, and that next one goes above and below. Right? Because as you'll see, everything that trades will trade in a continuous series of price discovery broadening formations, period. All right, and we're going to get to that proof, period. That's how price discovery works. And understanding this is what helps us gauge magnitude. It tells us how far we can expect things to go when we combine them with the other two. Section 1, proof of broadening formations. So the proof of broadening formations and the falsehood of using traditional technical patterns. Because debunking classical technical patterns is easier than you may think. Not only are they subjective, but they cannot be positively identified until after completion. This alone makes traditional pattern recognition absolutely worthless.
All right, so I'm gonna just stop it right there because some of you been through the questionnaire, some of you started your coaching already and been on the charts with me. Um, so real quick, because I know it's very fresh on your mind, and I see everybody is hungry. However, it's just you're one of the last people I had, one of the last people that I have speaking to about it. So Victor, and I will rewind it. Now do you understand when you was learning the tweezer bottoms that turn into the morning star? If you're the morning stars turn into the cup and handle, and if you're in the cup and handle is the inverted head and shoulders, and if you're in the inverted head and shoulders, you're definitely in that cup and handle. And if you're in the handle of a cup and handle, that's a bull flag breakout, right? So this is how I was able to start debunking things and decoding things. Because I always say Rob is a genius for what he has created. And this hasn't even been really out to like the masses, like how everybody knows what a RSI is or a MACD. Not everybody knows what the Strat is, right? Um, However, to create something, you still have to have knowledge on something to be able to create, and have a well foundation of it, right? So obviously, price action, depending on your journey in
Oh, okay,
trading,
you different. You different, gone.
huh?
Oh shit.
No, you good, bro. I was just about to find out who it was and just mute you, bro. I don't know who it was.
My bad, my bad. It was me. I didn't know. My bad.
Who is me? It's so I can know to put you on timeout next time.
Harden.
Okay. Oh, okay. Oh, Harden. All right. So, real quick, for everybody that's on, that's how I was able to decode those things. Gosh, oh, that's where I was. So you have to understand, okay, if Moody's going to create a book, right? Because I just created 3 books, well, 2 books to be honest. One was already made. I can't just create those books out of nowhere, right? I have to have some type of foundation or some type of knowledge and wisdom and some type of understanding to be able to put it together so someone is able to not just read something, however, gain something from it. And it's like a step-by-step pamphlet of like what you'll be going through or what you already went through and how to master it, right? So with me having that understanding, because we're all like that, right? Not just Rob Smith, with him creating a strategy, I had the understanding of, hey, you see Head and Shoulders, you see Bull Flags, you see all of this stuff, Morning Stars, all of this stuff, right? And I always say this, and I'm never gonna get tired of saying it. And for the coaching program, or even for full access, someone please do remind me so I can drop that recording for you guys. The interview with Ross Smith, just interviewing him and getting to understand how he created it, how it works, and things of that nature. You'll hear when everybody's talking in the background, I'm literally asking him like, "Hey, Rob, did you know that all your reversal patterns are morning stars or evening stars at tweeted bottom?" He was like, "Yeah." And I was like, "Okay." And we just kept going. And it's not that we don't want nobody to know or anything. It's just in the present moment when you're just learning and you're, picking someone's brain. I didn't even know that that happened the way that it did. But when I went ahead and, rewatched it, I was able to like see that and was like, wow, look at that. And I picked it up, but now I'm picking it up even more now, right? So with everything that I just said, so it can click in your mind, remember what I just said with patterns or anything. This is a strat guy. If you know Rob Smith, he's not wanting to utilize any terminology that's going to remind you or reflect on another strategy as support and resistance, things in this nature. Swing high, swing low. He's not gonna say that. So I don't want to lose us. So I'm gonna just say we're at like 311. Watch this. It's because I catch it. However, I laugh within myself sometimes. So when he's reading the table of contents, he even says for lack of either terminology or vocabulary. I think it was terminology. For lack of terminology, we'll say support and resist. You know what I'm saying? So that right there gives you a clear indication. Okay, you see all of this, and this is how you build your foundation, right? And it's your job, right, as a student, just like I'm a student, to be able to start decoding. No one and it's not that people do this stuff on purpose. Even your parents, as you was being raised, they taught you something. However, there was more meaning to it. However, it's for you in your own mind to let it unfold and they don't know for you to ask the question. But once you come and you ask that question, like, yo, mom, why do you utilize this detergent over this detergent, or why do you create your own detergent? And you start to get knowledge on whatever the case may be, it all starts coming together, right? And I know that we all can agree on that. So I'm gonna go ahead and stop talking and being long-winded and play this real quick. Watch.
They exist. Then we're going to look at actionable signals combined with the broadening formations. How the broadening formations become support and resistance, if for lack of a better term, have time frame continuity.
And you see how you laughed and contained it and kept going. However, because you know in your mind what it is, oh, let's keep going, right? But those are your gems to be able to pick up along the way, right? As a trader. So, it was at what, 311? Put it at 303. And I'll just rewind it a little bit so that everything that I said, you can start understanding with what he's saying right here and understand like, whoa, Moody's still trading the Strat. However, he created it in a way for himself. And that's why I've been like developing a book and, documenting so that I don't know. This is my strategy. However, it's the Strat, but it's not the Strat. It's simple candlesticks. And I literally trade one candlestick. And I'll start to teach you guys that as we gradually get into the Strat or finish the Strat. So I don't confuse you guys.
Because debunking classical technical patterns is easier than you may think. Not only are they subjective, but they cannot be positively identified until after completion. This alone makes traditional pattern recognition absolutely.
Remember, Luther, watch it click. It's going to ring bells. He said, you won't notice until after completion. If you see the pattern, you have missed the move. If you have to identify with the potential, that's why we like actionable signals.
Worthless, right? From a quantitative standpoint, everything must be defined as true. It's easier than you may. The proof of broadening formations and the falsehood of using traditional technical patterns. Because debunking classical technical patterns is easier than you may think. Not only are they subjective, but they cannot be positively identified until after completion. This alone makes traditional pattern recognition absolutely worthless, right? From a quantitative standpoint, everything must be defined as true or false. If then statements true or false, either a condition exists or it does not, right?
And I'm gonna pause it right there. I love y'all so much that I want this to start draining into your mindsets. Give me 1 second. Oh, let's start sharing my screen. Give me 1 second, and I'm going to show you what it's saying. However, not in, and I'll utilize this time frame just so you can understand that you see it in my background and somewhere back here, where it says uh it works on any time frame. I'm on a 12-minute time frame. I'm just gonna show you part of my strategy, right? Tweeze the bottom. We also have one here. However, please do not fight me. It broke the previous high and the previous low is not perfect. And I look at this as people and money. Money and people aren't perfect. You're just trying to design something to let someone else know in a symbol, hey, this is what's going on and this is what's going to transpire, right? So we got one right here. We also have one right here. I just don't want to miss. So I'm just gonna go ahead and grab a couple. This one right here as well. So I'm going for this one though. My magnet is not on. So you know what? Let's go ahead and make it perfect. Let's go ahead and turn my magnet on. You hear how I'm speaking and what I just said. Hey, my magnet's not on. Well, let's go ahead and delete that. That was pretty quickly. Let's go ahead and delete that and make it perfect, right? So we know it's right on our support, right? Ariel, that's why I said you need a class. However, I'm pretty sure nobody will mind me going back over it just so you can understand what price action is, because then you start to be able to identify what support and resistance, what's rejection, and what's a bounce area, right? And I'm going over and over with this. This is not the coaching session. However, Ms. Bernice, she needs that. She's that's how she likes to learn. She likes that repetition. So we're going to implement that because I also know that that will help everybody else to just continue to repeat things over and over just so we can be able to identify with it, right? So that's what price action will help you identify with. Thank you, Moody. You're more than welcome. Absolutely. So now that we're on a 12-hour time frame, right? When I tell you guys to move over to a smaller time frame, right? I'm going to start being me and exposing everything. There's no reason to hold back. I want you guys to be extremely successful, right? When I say go to a smaller time frame, if you jump down to a 2 or 1 minute, you are never going to see what I want to show you. A smaller time frame means to go to your next door neighbor's house, right? So I'm going to have a 10 minute. Some people don't have this, right? This is why you have this right here, add custom intervals. And this is why you want to customize things, right? Because you are the analyst, you're the one sitting behind here. You have to be the one to make yourself comfortable in your chair as you're trading or however the case may be. When I first began trading, I wanted to sit by a computer. I still was on my phone. However, it was just Instagram with me seeing what everybody was doing. So I'm thinking that's the stuff that you do until I found myself on my bed, laying with my pillow, cuddling up and trading, right? I think Harden seen me and it kind of exposed us. But it's okay, right? Because that's the life of a trader. And I want you guys to know how it truly is, right? Once you're comfortable with what you're doing. So let's go ahead and travel down to a smaller time frame. That's going to be my 10. And I also have a 13. First, let's go to the 13 so you can see how beautiful and real things are, right? See the tweezer bottom still there? Remember, everybody that understands price action, you see the bounce. Think of bounce. When you see the wicks, just think of like the pogo stick, that pogo stick. And when you're jumping up, think of this being the body. You are the body, right? So it's where you're opening and closing, regardless of the fact if you balance on it, there's still going to be a lower wick on there, right? So always think wicks are bounce areas, right? Wicks are entry areas. Wicks are liquidity areas. You know what I'm saying? If you're in the trade, right? If you're in the trade, this wick is for you to take out and take profits there, right? It's not about, oh, I want to hit all this down here. No, we trade the range. This is the range right there from right here. That's why all these candlesticks are encapsulated inside of here. A real Strat trader is going to know that this is an inside, 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 inside breakout. Patience, right? However, you'll start to identify with that once you understand that hey, these candles are still in collapse or enclosed inside of this candlestick. And that's why you see me throw my fib on, right? And it gives you the bigger picture and keeps you more calmer, right? And tells you when price is ready for you to start deploying money to make money, right? So now that I've done that, that was that bounce area. Let's go back there so you can see that that was the bodies, right? However, different time frame, different scenarios. Why? Because they had one more 13-minute, had one more minute. We know that time's not real. We have a 12-minute chart here. So with them having one more minute, the price actually bounced up. So you see how fast that price can move, right? With just 1 minute and not looking at the 1 minute chart. So now we're going to travel to the 10, right? And what are we going to find? Morning stars. And the reason you're going to find morning stars is because tweezer bottoms create morning stars. Morning stars create cup and handles. And once you can start implementing this into your mind and unlearn, I don't like to say garbage or bullshit anymore because none of that is garbage or bullshit. Actually, everything that you've learned, even though you're unlearning, right? Once you relearn, all that's going to come back like, wow, I understand all that so much better now, right? Um, so if I go down to the 8 minute, same scenario. However, when I go down smaller, I'm gonna find my morning stars. Still same scenario, tweezer bottoms. However, just keep traveling down and walk with me, right? Why do we keep seeing tweezer bottoms? Because that's how real the universal pattern is, right? You're gonna hear Rob speak about universal patterns in a way of actionable signals and inside bars. That's what moves the market. I also agree with that. What I also figured out is that tweezer bottoms also move the market, right? And tweezer tops also move the market and drop the market. And when you find tweezer tops, you find evening stars or they create them on a smaller time frame. There goes your tweezer bottom. And if you start to trade this way, you will start to see that this is all that you really get every single time. Our tweezer bottoms or tweezer tops, and you start to learn how to trade it. Where it's like, hey, for the first 5 minutes, they were very bearish. Hey, we're picking up. It went down a little bit. We're starting to push up. For the next 5 minutes, we definitely going up. All right, let's go ahead and trade that. Let's go ahead and put the around the right size and capital into this trade. Right. If we know the Greeks, now we know how to break things down from a dollar amount to a $50 to a 50 cent amount to 25 cents. Right. and knowing how much money one is going to make, right? So for the people in the coaching program, right, you see how everything is still like boom, and it seems like I'm flowing it together. No, it's just how I'm teaching it. However, these are different metrics. However, they all go together. So once you are able to start spinning it, it all comes together. I know I was a little overwinded. Can I get some ones in the chat if y'all understand it? Can I get some twos in the chat if y'all don't understand what I was just saying? Awesome. Well, I love it. I love it over a one. That's what's up, Brittany. She said it's over and beyond. What are you talking about? Love is love. I feel that. Okay, that's amazing. That's good to know. So everybody's on point, right? And remember that these are tweezer bottoms and morning stars. You're now able to see your cup and handle. You're able to see your inverse head and shoulders, and that's why everything happens. However, since I did it from a 12-minute time frame, the more that I go down, the more that that's going to start to appear and show you that, right? So that goes back to um basically debunking patterns and understanding if you see it, you're late, right? So the potential morning star would be like this. Seeing this candlestick, oh, this one closes, grab the next one and go. And that's why we trade live open candlesticks because that's where the money's at. If we wait for a candlestick to close, and no disrespect or anything, but if you do that, what happens is that you bring that anxiety back to you. Why? Because now it's a brand new candle. You don't know what's happening. Now you have to look at the time frame continuity. Are my participants still buying? And sometimes it works out in your favor because of, hey, if my 1 minute is buying, my 5 minute is buying, my 15 and 30. However, time has been going by where now I've gotten new candlesticks on these time frames, but my 30 now has 5 minute. And let's just say 5 minute gets is not getting a new candle yet because it's correlating with the 30 minute. And right in between these time frames, 1, 2, and 3, they're still getting new candles. So you'll get a pop up and pop right back down, right? And then those candlesticks finishes move, finally closes, and then hey, rejection right back down. Meaning you can see everything I just said. I explained it. Now look at this candlestick. Boom, closes, new one comes out, still went two up. You're thinking of the Strat not working. Bye bye, baby. And that's because, let me see if I can make you see it. Because I'm learning to I am learning to explain my method, even with the candlesticks being closed. You see that? And that just lost 1 minute. That was just 1 minute that it lost. You feel me? But that was a 3 minute candle. So for 2 minutes, it was up here, took out the liquidity. You got greedy, bye bye, baby. Left that liquidity up there to try to go get it. Hey, didn't get it because they took these out and they already took the PMG out, and it was an actionable signal inside the morning star, right? One target, two target, three target. Oh, but it didn't hit that one, Moody. Do we want to look ourselves in the mirror and say, hey, it did exactly what it was supposed to do. I wanted more out of this. It's not that I'm greedy. Maybe I understand what I'm doing and I actually have confidence, but I am not knowing what my risk tolerance is because I learned risk management completely wrong. And I'm only trying to put up what I'm willing to lose, not what I'm willing to risk to change my life. Now, does that make sense? Because I got to get back to the class. But drop a one if that makes sense. Bree says, "How will you know the exit or where the move is going? Never mind. I guess that's what we're learning." Yeah, yeah, it clicked, didn't it, Bree? But let me not assume if it clicked. Did it click? But that's what you're going to be learning right now. Yeah, okay. I was just giving you my sauce because I said, hey, let me not just wait till towards the end of the Strat, let me give you a little bit just so you can understand what he just said and how I've been decoding the chart, right? That does make sense. All right, awesome. All right, awesome. All right, so I'm gonna go ahead and come back in here. And now you're gonna be on fucking fire watching this shit. And now let me go rewind it.
You may think. Not only are they subjective, but they cannot be positive patterns. because debunking classical technical patterns is easier than you may think. Not only are they subjective, but they cannot be positively identified until after completion. This alone makes traditional pattern recognition absolutely worthless. Right? From a quantitative standpoint, everything must
You hear that, right?
be defined as true or false. If then statements.
And that's why I don't trade patterns. What does Moody trade? It's a word right before it. And I'm not gonna play this until somebody types it in or unmutes themselves and say it, because you need to know that. Don't say tweezers bottom or morning stars, because that's what they are. What are they? What are tweezer bottoms and what are morning stars? Let's start right there. Terminology is very important. I love that. They definitely are candlesticks. Can we dig a little deeper? They're definitely candles and price action. Yes, reversal was the. Oh, snap. We got Malena in the building. Reversals. There we go. 11. Bang to the bang to the bang. They're universal. You let me know when God lies to you. I used to think he was lying to me till I learned to shut my mouth and just believe. Yes, Big B, they're reversals, universal. Universal. You saw what I just broke down? You saw how I was at the 12, the 13, and it was just there. Imagine if I just let me take you to the 12 and really show off. Let me show you the time frame you should look at. That's the only time frame that tells you exactly what's gonna happen the whole day. You've seen it. I don't want to show off just yet. You know what I'm saying? Let me build it in. You know what I'm saying? However, universal reversal patterns. And that's what it is. Remember, any time frame I went to, we kept seeing that where I drew it up, right? And we know what creates what. So now we don't get scared because we know the potential. The potential is the potential morning star. However, the tweezer bottom starts. Some people like to trade it after it closes and try to get the break. However, that creates a pattern and that's subjective. Trade the live candle. Believe in yourself. Everything that you do is live. You get in a car and you drive live. You don't just, oh, I got there.
It's true or false. Either a condition exists or it does not, right? And thus can be proven. So if you hear people saying it looks like a head and shoulders, and how come sometimes it goes up? And if you read any books, classical technical analysis, there will be chapters about head and shoulders and failed head and shoulders patterns, which is if, somewhat comical because a dog is always a dog. It's not sometimes a cat. And so people will believe these things because when it goes in their direction, they'll be like, see, it was a head and shoulders, which is absolutely false. And then it's already completed, which makes
And
it
that's why I
worthless.
waited to be on my fourth year to really show out. Why? Because that's 3 years of really honing into a strategy that you want to trade back to back, back to back, back to back, back to back. And hearing my mentor, there's someone I used to speak to. I wish I had the pleasure of speaking to him now. However, I got Mark Monroe. I'm chilling. So long story short, um, that's why I can take you anywhere. And y'all, Victor, you've seen it. Everybody, most majority of everybody's seen it. Tweezers, 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 morning stars, morning stars, morning stars, tweezers. It don't stop. So a dog will always be a dog. A tweezer's always gonna be a tweezer. A morning's always gonna be a morning. I'm gonna wake, I'm gonna rise up and I'm gonna go find joy. I'm gonna rise and I'm gonna go find joy. You get it? All right. Well, let me go to chat. Excuse me, actionable candles. Yo, y'all all fire for saying candles, actionable candles, reversals, because y'all get it. However, it's just having that universal is like learning how to manifest. You know what I'm saying? Actionable, actionable. Remember when we was looking up words, Victor, I kept saying look for the verb because we put it in action. So I say do the knowledge, not knowledge, because knowledge is a noun. But when you do the knowledge, that becomes an action now, right? It's something that you're now manifesting physically, a la arm, leg, arm. Hey, you have all the power within you, right? That was such a great video. Yeah, a video of y'all. Appreciate it.
Either it is something or it is not something. So once you can get classical technical patterns that anybody's ever told you before out of your head faster, the happier you're going to be as you see as we go along. Broadening formations are a universal truth because the breaching of both.
Love you, Living Bang Bang. And and that's kind of like how I got you saved in my phone.
Both sides of a range of an outside bar cannot be disputed, right? So if the range is taken out on both sides, no one can say that didn't happen, right? That condition exists. The existence of
Let me break that down. The reason he says that that couldn't exist is because a one bar can stay a one bar. A two bar can never go one bar. Is the direction. You cannot dispute that. If it's one and it goes two, two cannot go two, two cannot go one, three cannot go two. Right? And there's only three things that can happen in the market: inside bar, consolidation, chill the fuck out, right? Two bar, directional, up or down, right? Three bar means, hey, stop. That's why it's in orange. Well, I said orange, my bad. Pink, my assumption, not me thinking, not me asking Sarah Sniper, hey, is this why you have it? No, I seen a traffic light as soon as I seen her thing. I see numbers. So I was like, whoa, yellow means stop. That's why it's consolidation. Pink, red means stop. That means, hey, really stop. Yellow means slow down. So for some people, it means speed up, right? If you know time frame continuity, you catch the break quicker. So when you put things into analogy and into your life and you practice it that way, it becomes easier because that's what you already known to believe. And you're not going to remove that belief system that you known to believe. That's how you live your life, right? It's why you believe time is real.
broadening formation is important because through price discovery, range breakouts fail or they are successful, right? So when these breakouts fail, they're going to try and test the other side, as you're going to see. Outside bars prove the existence of broadening formations because they show that both sides of the highs and lows of a previous range were breached. So simply the fact that outside bars exist is proof positive that what I'm saying is true. No one can dispute that. As a result, the lower time frame must be a broadening formation, and that's what you'll hear me call them fractal triangle, right? So if you have an outside bar, which took out both sides, from a visualization standpoint, you won't see the triangle, right? But we know it's there. Therefore, we can take it down to a shorter time frame to identify the triangle, the fractal triangle. But the outside bar tells us that it's there.
And now I'm gonna rewind that. In fact, bro, what you said, Macau, it was a direct message. But time, how did you say it? Oh man, I gotta go back to chat. Time is construct, right? And once you understand that, come on now. But I'm gonna rewind that. So why? Because I'm always saying this. However, I know it goes over people's heads, right? You want to find that. You want to go to a smaller time frame, right? We're trading the bigger time frame, the bigger time frame, and when we find our exact move, right? We're going to set our stop and everything, right? That's why we don't go with percentages because our stop may be a little, you know what I'm saying? You know what I mean? So for the scalpers, when I'm saying that, that means, hey, maybe I don't need to be on a 4 hour. I don't need to be on the hour trying to chart going down and knowing my move. Maybe I just need to go ahead and grab that 5 minute, right? And chart and go all the way down to my 1 minute, right? Because I'm gonna have my 5 time frames, my 4 to 5, right? And if you're really super nice, just 3 minute, 2 minute, 1 minute, 30 second, 15. How you doing?
We can take it down to a shorter time frame to identify and that's what you'll hear me call them fractal triangle, right? So if you have an outside bar, which took out both sides, from a visualization standpoint, you won't see the triangle, right? But we know it's there. Therefore, we can take it down to a shorter time
Meaning, here you go.
frame.
No, Rob, hold on. Give me a second, Rob. Remember, Rob, you gave me the lead, brother. Dude, where am I going? Foul. Right? So we could just stay on the 3, right? And yes, there's more broadening formation. So if you can see another broadening formation, even when I do this, that means that you can see. However, let's go ahead and grab the ray. So when you draw a broadening formation, it's from the right to your left, right? And you normally see them draw it from here. It's from your right to your left. I don't like to draw it this way because then I have to do all this extra stuff, like extend my array. So I just choose to draw it because I can see it from right here to right here because now I don't have to do all that fancy stuff, right? And if I need to face it, I can face it. But this is your broadening formation right here, ladies and gentlemen. However, this is not how you trade it. You can if you just don't like that, right? However, just so you can start conceptualizing, these are things that I used to do, right? In the coaching, you're gonna go through a charting session, not just a session. Like I told you guys, the list that you see doesn't mean a day. It's smacking you through it. Like, no, you're going to learn this. And what I've learned with the mind, repetition of a week of the same thing locks in, right? Depending on how serious you think it is. So that your own mind, right? Your own mind and your own heart, so you can marry the two and you can be soundless as you trade, right? Emotionalist, right? And it's not that you're truly emotionalist, it's the fact that you're able to manage your emotions a little bit better, right? Um, Draw with this tool right here, right? This is your broadening formation that you're drawing on. However, this is another reason I don't like to do this because when I take you to a smaller time frame or I start to move around, we're not going to be able to identify with this very well. Well, that's why I like to use rays, right? Because they're going to show me my stopping point, right? Now, when I do this, go ahead and grab this. And the reason you want to do this, do you know that this 3 bar, right? You could do something like that so you know that those two candles are what's connecting it when you start moving down time frames. However, just draw a whole circle on that 3. And I kind of got some of the other candles. However, go down your time frame. Why? Because your mind wants to see this. It doesn't matter. Your heart wants to see it, wants to know, no, this is true. I'm going to fucking execute every time now. That's how we know when something's real. So I just went all the way down to like 30 seconds. My apologies. I should have never did that. I was on a 3, so let's just go to a 2 so you can understand why I'm going down the time frames. I just gotta find where I drew this stuff at, right? Right, right. So this is why I'm going. You still got a 3 bar there, right? However, now that I went smaller, that 3 minute candle turned into 2 candles, right? So yes, in the 2 minute candle, for a 4 minute candle, it's 2 candles. However, for a 3 minute, the same thing too. Why? Because sound's not real. You got to give it to the extra bar, right? So that's why I'm still going to go to a smaller time frame, right? Because I want to see the whole move, the whole broadening formation. I want to see how it broke and what happened, right? So if I go to the 1 minute now, because that's what he's telling us, go to this. Now you can see the triangle. Now you can see like, no, yeah, it broke out real quickly. But guess what? Moody didn't chart the tweezer bottoms and all that and gave you real universal truths, right? Because tweezer bottoms, like even right here, like if you was on this candlestick, right? Even though it went down, it closed right here and it pushed up. This is a tweezer bottom as well. Guess what, guys? All that liquidity shit that you learned, understand that's bullshit. It's just fucking liquidity. It's for this fucking candlestick to come and rip this a new asshole. Excuse my freaking French. That's what it's there for. It's liquidity. Somebody placed their stop loss there. Guess what? Oh, they thought that they was gonna not get stopped out. They stood in their trade. We faked you the fuck out. Boom, smash. Now, how you know, right? Because people would think, oh, it's not gonna break that part. No, what is not gonna freaking break is the real support, the tweezer bottoms. That's why I show you this. And when I can break this down in your freaking minds, let me stop saying that. When I can break that down in y'all beautiful minds, because life is real, Moody. Stop playing, row your boat. What do I want to show you? Hand, come on now. We're gonna do down here. You like shroomies. All right. When you can understand this, and I'm gonna just go by real quick, Ariel. Let me make sure you're on here. So I'm just not over. Oops, she's still on here. Here you go, Ariel. So price action. This is what price action truly is. It's one candlestick. All that other stuff that you know, that's not price action. When you put them all together and you see all these candlesticks, one is price action. You start putting them together. Now you start to have candle patterns, right? And this is so beautiful that the father put this right here for me to talk about because you see how they're circling one candlestick because they're talking about one price action because these are actionable signals, right? However, I just go ahead and simplify things for people so they don't start to get confused, right? Hammer, right? You can look at the hammer and the pin bar as the same thing, right? Also, if you find it at the bottom of a downtrend, you can know that if it's on a 5 minute and you found a hammer and it's starting to move up on the next candlesticks, you know that there's a gravestone on a smaller time frame. Why? Because you motherfucking breaking that candlestick down so he can't motherfucking move no more. So you know he damn near open and closed right here. This is the open, drop, and boom, close almost there. So you knew you on a smaller time frame, that's what it is. See how I'm breaking it down for you and how you can start visualizing things a little bit better, right? And once you start the just, hey, I'm not gonna say hangman, just dragonfly, inverted pin bar. That's all we're looking for, right? Because it's the same thing, like inverted pin bar right here. The thing is, they're gonna throw you off. Oh, shooting star, right? Because that's still the same shit. It's still the same shit. You just got to understand, okay, inverted pin bars, they say inverted when they find them at the bottom of a downtrend. However, to simplify it, is the same thing as the shooting star. This just when they say shooting star is it's going to reverse. However, that's what happens with reversals with actionable signals. And once that can that just marries into your mind, you literally start to say, no, I want to trade price action. Why? Because you start looking at these fucking candlesticks and you're like, what? I learned the 4 hour and this motherfucker just paid me $35, $78, $153. Why are you trashing the trade? Even with one contract, right? So let me get off of that. So what is price action? Price action is the opening of the candlestick, right? So wherever you see open right here, that's going to be support. We're just going to write support right here, right? That's your support for the remaining of whatever time frame you're on, right? That's your support. This is your bounce area, meaning that it took out some liquidity and it bounced, right? So now that you know that the bottom, the low is your bounce area, that's your support. This is your close, right? That means your close is your resistance. Price could not get past this because the next candlesticks determines your resistance because candlesticks confirm each other, not indicators. Indicators give you an indication. The definition all is in the word, my loved ones, right? So when we understand that, we know that the high is now our rejection, right? Rejection is like resistance, but is alike. It is not alike. I'm sorry. It is similar, but it's not the same thing, right? You can get rejected from there. However, what does rejection mean? Just for this time period of rejected from there. Because once you start looking at the candlestick as one individual candlestick and represents the time frame for what it is, just like, hey, your boss may say, you have this duty for the next 30 minutes, you have this duty for the next hour, right? Or some people are just a little bit more different at their jobs where it's like, hey, this is what I do for the first 3 hours of my job. Then I go do this after I take my lunch break. You know what I'm saying? You have time frames and time periods that you do things, and that's why we love the clock, right? But when you understand time and numbers, I don't know, they said that you may find God is, supreme mathematics. All right, so that's the rejection. Same thing for your bearish. Moody do explain this, right? So for the bearish, even though it's the opening price, yes is a support. I'm always going to remind you it is resistance, right? Why? Because support is always found at the bottom, resistance is always found at the top. So with a bearish candle, we know that it opened up and it pushed up to the next rejection area, right? Took out liquidity, rejected, came back to its support, broke support. You get it? Now you see the inverted pin bar. That's right here, baby girls and baby boys. That's that inverted pin bar right there. However, now why I say I trade one candlesticks, just imagine this motherfucker being an hour, being a 30 minute, and then I go down to the 5, and then the 15, the 5. Now I get more candlesticks. You see the inverted pin bar? We pop this bitch down and go see what's happening. And we gauge the bigger time frame and say, nah, this move continues on, especially if you found it at the top of a range or at the bottom of a range of the previous candle. That's how easy trading starts to get, right? So now that it broken its support and turns into resistance, it goes to its next support, goes straight through it, right? Boom, Now it bounces, took some liquidity right there. Now it closes right there. And then when you put both of these motherfuckers together, sorry, I'm just passionate right now. When you put both of them together, what do you get, my ladies and gentlemen? You get a tweezer bottom if you're looking at it from this candlestick to this one, right? Just like this from the bottom. But what it truly is, when you truly know, hey, this candlestick opened up first and it went up, so it's a tweezer top because you need the next candlestick. And that's what price action is. And right, when you look at the chart, there it is right here. Open, high, low, close of a time, right? Minute, time, period. Period is the candlestick. You get another period. That's how easy it is. I'm saying period. Rob says groups, right? And then you get to understanding your security and how it trades on a 1 minute chart. Like, wow, this thing moves about 12 cents, sometimes 16 cents, 6 cents. This thing's a little mover. Okay. And this motherfucker's gonna run. You should be in anything that's energy, right? It's still not late. She just started. All right, let me answer these questions, then I'm gonna go back. I know Rob is going to go on the charts after, but could you show us how to identify a Browning formation? Yeah, I did. But this is probably a late question. Hold on. But I'll do it again. I see the 3 bar on a larger time frame. How do I identify it? That makes sense. I got you, bro. I got you. Let's let the video go through, and it's just because I'm somebody of like taking care of the obligations, and then let's party afterwards. But I got you. I got you. And trust me, if you see me get back off the video and start explaining something like that, like, hey, Moody, hit that 3 bar real quick on a bigger time frame. All right, let's get back into it. And I'm gonna just rewind it so you could get back into what he was saying.
Successful. The existence of broadening formation is important because through price discovery, range breakouts fail or they are successful, right? And so when these breakouts fail, they're going to try and test the other side, as you're going to see. Outside bars prove the existence of broadening formations because they show that both sides of the highs and lows of previous range were breached. So simply the fact that outside bars exist is proof positive that what I'm saying is true. No one can dispute that. As a result, the lower time frame must be a broadening formation, and that's what you'll hear me call them fractal triangle, right? So if you have an outside bar, which took out both sides, from a visualization standpoint, you won't see the triangle, right? But we know it's there. Therefore, we can take it down to a shorter time frame to identify the triangle, the fractal triangle. But the outside bar tells us that it's there. So once again, let's look at outside bars. All right? There's a few different
I
types
love
of
looking
bars
at money. I'm sorry.
Bullish engulfing outside bar. A bullish engulfing outside bar must gap below the previous bar's low. So here, as you can see on the right, here is this bar. This gapped all the way down here and closes above the previous high. The wicks are irrelevant.
I'm
This is
gonna
a
show you how
bar
to
that
look at this
I
chart. You
would
see how
call
you see
that.
his chart? Most people won't even be able to identify this, and they already set this. One, I ain't even gonna talk about that line. I don't know why it's there, but I'm gonna say support and resistance, whatever, or liquidity. Him about to take it out. But look, this is a broadening formation on a bigger time frame. He's on a smaller time frame, identifying another broadening formation. What he just said. Let me go ahead and rewind that just so it can just marry to your mind.
Shorter time frame to identify the triangle, the fractal triangle. We don't see the triangle, right? But we know it's there. Therefore, we can
Meaning the
take it down to
triangle, the bar that he's showing you has a triangle that he's saying it broke the previous low. When he shows it again, it's an inside bar and it's a big old green candle. That's the candle that you will not see the triangle on, right? That's why I was identifying with the bigger broadening formation that he has. And when he draws it, you'll go to a smaller time frame and you'll see the move. And 9 times out of 10, if it hasn't been already like breached a few times, now I'm utilizing his terminology. If it hasn't been tested a few times on that resistance, is going to come back down at least 50% of that. See, you can utilize 50%
to a shorter time frame to identify the triangle, the fractal triangle. But the outside bar tells us that it's there. So once
Now
again,
let's look at it.
Let's look at outside bars. All right? There's a few different types of way this can happen.
When you're a great educator, it just simultaneously falls together. And if you're paying attention, and it's not that if you're paying attention, it's that I've been doing this, I have experience over this, right? So I can identify with it quicker. And my job is to give you my experience and identify things to make your experience go much more quicker, right? So just continue to hone into it.
Bullish engulfing outside bar. A bullish engulfing outside bar must gap below the previous bar's low. So here, as you can see on the right, here is this bar. This gapped all the way down here and closes above the.
You know, I got to give you my strategies. Why is it closing? Why is it closing so fucking flush? Why? Because that's your support and your resistance. All this is liquidity. You see how they try to take it. Sight, gotcha. We're gonna go ahead. This one says sight, gotcha. Opened up, took them out, gave you the morning star, took them out. This hit the 50% retracement, tested it, came back in, said boom, take out the PNG. It happened so fast. This could have been on a 1-minute chart. And that's why I love scalping. But when you learn to scalp, you learn to, oh my God, this is real. Let me day trade it. Oh my God, let me start swinging. However, it takes time, right? Just like everybody that went through coaching, you gotta separate your portfolio, separate your mindset. Shoot, look, some of us out here heathens, right? I'm sorry. It's true. We ain't all out here righteous and really trying to help people. Some of out here heathens, right? So think about it when you talking to Shorty over there, or hold on, let me not just talk about the man because the females be out here wilding too. Chris Brown said, they are you?" Right? So both units, when you want to live a double life, you got a different mindset for the wife. You got a different mindset for the what they call them now? I don't know, the side piece. You know what I'm saying? You got one for the snack. You treat every single one of them different. The wife get anything you want. Da, 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 da. I'm loving it. You feel me? So you have different mindsets for things. You see, I'm joking, but everything is real that I'm saying.
Previous high. The wicks are irrelevant. This is the range. The high of that, the low of that. This gapped below, closed above. That is a fractal triangle on a shorter term basis. It's bullish engulfing because the opening and the close completely engulfed the entire bar, right? Just completely mauled them down. Conversely, a bearish engulfing outside bar must gap above the previous high and then close below the previous low. Here, gaps.
Now I'm gonna ask everybody, because I'm gonna allow him to teach, but then I'm gonna ask you guys, are y'all catching what he's saying about bullish engulfing candles, which are 3 bars, and bearish engulfing candles? Drop a 1 in the chat if like I'm catching it, Moody. If you're not catching it because you're having a thing, just drop a 2 in the chat. I'll give you the answer. I'm learning that my loved ones don't ask a lot of questions, so I'm helping direct y'all so y'all could just get the answers quick. 1, you caught it, Harden, bro. You know I'm gonna test you. I think I do. All right, cool. Look, Harden, I'm gonna let you rock. He said he think he do. Oh, Harden. What is it, Harden? My guy bold, and he put the capital Y. Talking about yes. What's the difference between the bullish one and the bearish one? How do I, without the color of the candlesticks, how we're identifying that this is a bearish one, and this is a bullish one?
The price that it closes at, like the bearish is gonna close below the previous candle's low, while the bullish is gonna close above the previous high.
All right, now I'm gonna help y'all see it before it happens. You're correct, and Wally, you're also correct. One must close above, and oh no, one must close under. Yeah, oh, Wally, you caught it. You caught it. Because I know we all speak different. You caught it, my man. Fire. And I know that it's late and you're just getting off work. Yo, God is on fire. And what he means by that is that the bearish one, Harden, you was absolutely correct. That's you seeing it and visualizing it. You know you like to see potential. So the bearish will gap. or go and smash out the high first and then the low next. The bullish will smack out the low first and then the high next, right? Without looking at the colors of the candlesticks and understanding the range and how it sweeps out liquidities, right? So always keep that in mind. And I know that that's like, oh, wait, well, I could identify that with just understanding it's bullish or bearish, with knowing that one is going to get taken out first, and that was the trajectory, you start to truly understand how to draw this Brownian formation and continue to execute on a smaller time frame and grab. Remember when I said you could put the 50% retracement inside of the Brownian formation and smash right through and hit the. And that's why Sarah Sniper's fire. Why? Because she put the 50% retracement, but she put the 50% retracement, say if this is this time frame, and then you trade it and you wait for the next. Right here, you would have put the 50% retracement. If it leaves the range, you keep going. Me, I'm going to put it on there and run to the small time frame, execute on that. And that's why it's good to learn strategies and make it your own. And just think about it. This is 22 minutes, 6 minutes and 29. I started this class when? At 9 o'clock, a whole hour's been passed, and I still haven't let him finish what he was going to explain. I keep dropping more gems and explaining it more in depthly. Don't let that go over your head.
I have a question.
Above this bar's range.
What's up?
So if the bearish gaps above then closes below, does that mean that the wick on top is way bigger than
What do you mean by way
below?
bigger?
Like if it goes and takes out the liquidity at the top first?
Got
Would
you.
that
I
mean
understand what you're saying. I understand what you're saying. I don't want you to get confused. It doesn't matter if this wick was right here and this wick was right here. It don't matter.
okay.
The only thing that matters is that this is your range. That's the whole range. So if you leave this range, trading, it's a wrap. Just like forget about 3 bars that we're learning. This is your range, right? This hit the 50% retracement. Moody don't do all that. Just range, right? This is your range. When this next candlestick, the body continues on up because we could tell it open and push down, but it stays above the previous body, it leaves the range. Just like this one here, right? This one's a 3 bar. It is a bullish one. So it came down first. It opened up here, lost its support and resistance to the previous candle, came down, broke the other support and resistance of its 50% retracement, took out the liquidity, hit the 50% retracement of that one, came back and said, goodbye, we're going to go up. And the same thing with this one, right? That's why we trade candlesticks to candlesticks, because we just want to get out the range. You feel me? We're going to get out the range. The thing is that most people are not looking at a bigger time frame and understanding, hey, how much time does this candlestick has it broken the range? Am I going to be getting out of another range and things of that nature? What I was able to do and decode is just, if this candlestick is here, we have gotten out of the range. However, I know that I'm in another range. So if I go down here, I have more candlesticks. So I found my range in here and I find that true support and resistance, because the candlesticks don't lie to you. Does that make sense?
Kinda.
Okay, what doesn't make sense?
I'm not really sure.
So you was right here saying, hey, is the wick is longer, right? If the wick is longer and it gaps up to take out the bottom, why help me understand in your mind frame, why is the wick something, what is the wick representing to you? When it's representing to us, it's just that it's taking out the previous range, the previous candlestick, and
So I guess it
that
just
was
doesn't matter just as long as it takes it out.
correct. That's what creates the 3 bar. If it takes out the top and it takes out the bottom, right? If it's just this one, this was a 2 bar as well, but it came back down. This one opened up. So let me imagine none of this big candlestick being here and it just opened up and it's right here. It's inside. It's a 1 bar. It's a 1 bar. It's a 1 bar. Triggers and it turns 2 bar right there, right? So when this one triggered and it turned 2 bar right there, it started to fail, right? Now let's go to this candle. It started to fail its previous green candle and it went down and took out that candle. Makes more sense?
Yes.
All right. Now let me ask you a question. Are you confused, and what are you confused about? And it doesn't have to be about what we're talking about. What are you confused about right now?
I think I'm just learning.
Okay. What's your name?
It's Ariel.
Oh, it's Ariel. Oh, it's because you're just learning. Say
Yeah.
less. Ariel, do me a favor. Because sometimes I like to break things down a lot. Go to YouTube and look, I'll just guide you. Go to YouTube if you want to learn this extremely fast. Oh, I don't even gotta do all that. It's in the Discord, so you don't like have to. It should be in the Strat.
Is
And
it the
here,
playlist?
yes.
Yeah, I just
However,
started one video today.
I'm gonna tell you which one to go to. Because that's not fixed yet. Sniper. Right here. Start right here with what's the 1, 2, and 3? What's the 1, 2, and 3? Once you she breaks it down like super, super easy. Like I was gonna start breaking down her video so people could like see what I see with her, and things of that nature. But I would tell you literally you can watch this straight through this way, and it's really acknowledgeable, but understand that it's not how you're gonna learn it from Rob, right? It's her way of explaining the strat. And however, she's the one that taught me the strat. I learned the strat through Sarah Sniper, then I went to Rob because I was like, oh my God, I understand this. And I was like, wait, you're the creator. Let me learn it from you. And then, I ended up building a relationship with him. However, I would tell you to start literally right here. And you could go to actionable signals and then you could say, go to learn where to take profit. She's going to talk to you about magnitude, right? That's what you're gonna be learning right now, throughout the broadening formation. But he's going to, he's the creator, he's the original, so he's going to give it to you. Like what I'm doing is just breaking down what I know of what he teaches. And I've been through his coaching programs.
Closes completely below, almost gap above the previous high.
Now I'm gonna rewind this to the bullish one for you, Ariel, just so it can start locking in. Everybody else could be patient, and they need it as well.
Below the
Right here.
types of way this can happen. Bullish engulfing outside bar. Bullish engulfing outside bar must gap below the previous bar's low. So here, as you can see on the right, here is this bar. This gapped all the way down here and closes above the previous high. The wicks are irrelevant. This is the range, the high of that, the low of that.
You heard him, Ariel. The wicks are irrelevant once you
Yeah.
know what they really are. We care about the range.
This gapped below, closed above. That is a fractal triangle on a shorter term basis. It's bullish engulfing because the opening and the close completely engulfed the entire bar, right? Just completely mauled them down.
I'm sorry to pause it. Harden, that was that big red candle when we was live trading. I was like, no, I'm not closing this shit yet. This was impulsive. Hold on, nah. And we got out green.
Dude, that shit was so quick on futures. That shit was like boom boom. Like,
Oh,
dude, it was quick. I was like, whoa. At least I was glad they didn't really fuck around with that fucking level that much. So,
yeah,
but yeah.
yeah, yeah.
A bearish engulfing outside bar must gap above the previous high and then close below the previous low. Here, gaps completely above this bar's range, closes completely below this bar's range. That is bearish engulfing, and it's an outside bar fractal triangle on a shorter term basis because it has to be. The regular
Harden, and for
here,
everybody that's advanced on the 50% retracement, what I always do, even though I fib this candle on the 50% retracement, I'm gonna want to buy this candlestick here. However, how I don't get faked out is me knowing support and resistance. This goes up, yeah, I'm looking for the tweeze of bottom. However, it has to hold and keep pushing for me to get in because if I see it on a 1 minute it has to keep pushing on the 5 seconds. So like when you know my overextension in my levels, you know not to take the trade because it's overextended and that move was powerful, especially if it was a 3 bar. And if nothing closes, or even if it doesn't attempt to like for a minute and a half, let's say this was a 5 or like it was a 1 minute for 30 seconds, if it doesn't stay strong right there, don't take it, right? Because it's testing and you'll see it reject. And whenever you start to see that, when you start to see the new candlestick open up and you see it go test and you see it start rejecting, oh, you're gonna start learning how to trade and you're gonna take that whole entire range right there, right? Because this motherfucker is irrelevant. That's where the money's at. There's nothing there. It has to. It does it all the time. It does it to these candlesticks too. That's why that one went powerful. And once you can identify what I just said, oh my gosh.
Gaps above, completely above this bar's range, closes completely below this bar's range. That is bearish engulfing, and it's an outside bar fractal triangle on a shorter term basis because it has to be. The regular outside bar, it breaches both the highs and the lows of the previous bar, and the opening and closes are contained back in the previous bar's range, or at least one of them is. So regular outside bars are oftentimes misidentified as engulfing bars. They are not. They are two different things. Right? The engulfing are going to be more powerful, most likely, because they have completely wiped out the other
And
side.
it's the body of the candlestick. Remember, the body is where the money's at. That's the muscle. It's like, you know what I'm saying?
Point. You can see the battle is on. They've tried the highs, they've tried the lows, but come back and are still within this range. Still within this range. The open here was still.
And what I always was able to identify is how it opens and closes below its support and resistance. Yes, it closes within its range. However, it's this that it needs to pass. Bodies.
In this range. All right, so the other possibility, there's two other possibilities of how an outside bar can form. You can also gap up and go all the way down and come back up for an outside hammer. You can also gap down, go all the way up and come all the way back down for an outside shooting star. Those are the only possible.
What time is this? 7:33. The outside hammer is right here. Outside hammer. It's because I just remember explaining it to Ariel, right? And that's meaning that it opened, pushed up, it failed, came all the way back down, gained its momentum, and smashed right through the outside hammer. 7:33.
Outside hammer. You can also gap down, go all the way up and come all the way back down for an outside shooting star. Those are the only possible outside bar outcomes. So if we go back to what we've talked about in the previous videos, since an outside bar is also a fractal triangle, right? What that means is the 1 bar rev strat, right? Those are broadening formations on a fractal basis, right? Because on a 1 bar rev strat, it took out both sides of the range, right? By definition, therefore 1 bar rev strats are broadening formations. Section 2.
Yo, Victor, if you still on here. Luther, if you still on here, you know those time frames I'm working on, and I show you that this is the whole move. Now think about it, right? You know the time that candlestick closes, we see that actionable signal, and you see how it goes down and it gives us a lot of those 3 bars. It's how I'm able to see all that stuff. And it's like, oh no, this is actually strong. It just went to take out liquidity, get the rest of those people back in. Now we go.
Actionable signals with broadening formations. So actionable signals with broadening formations. The importance of combining actionable signals and broadening formations. If the broadening formation continues to expand, so does the potential magnitude of our expected move. Right? By definition, the ranges are getting bigger. Right? However, the expected move is always subject to the exhaustion of the actionable signal or signals and changes in time frame continuity. It's very important. We can draw a triangle Just because we have it there or we can have identified it doesn't mean doesn't have any risk, right? Because anytime those actionable signals exhaust, right, and the time frame changes, right, we have to be aware of that. Hammer following an outside bar. So what we know from actionable signals is a hammer is an actionable signal. In order for it to go in force, it needs to trade above the high of the hammer, right? So if you look at this, we can look for the high of the outside bar. So in force, we can look for the high of the outside bar to be breached as the broadening formation continues to expand. What does that mean? What that means is we've identified an outside bar. So on a fractal basis, that's a triangle, right? And so what you will see as attempts at one side fail and get reclaimed with an actionable signal, oftentimes what we can look for is to completely take this bar out with this hammer, right? Very important that this took out that. Now they try to expand the range, and if they failed that, we're looking for this hammer to try and be powerful enough to come up and go back towards the high of the fractal triangle. That's why we want to look for hammers countering outside bars. All right. To have identified and gauged the potential magnitude, you can look for the lower time frame. In this case, the hammer following the outside bar is on a daily chart, so you can look to 60-minute, right? Go down to the 60-minute for the fractal triangle and see it a little more clearly. Conversely, the shooting star goes in force below the low of the shooting star, right? At that point, to gauge the magnitude, we want to look at this outside bar to get taken out, right? As we get down to a fractal basis, we've got a triangle that attempted to expand and is now coming back in. If this expansion continues, we can come down and take all of that out. To identify and gauge the potential magnitude of the broadening formation, you always look to the lower time frame again, right? Again, the shooting star following the outside bar on a daily chart, so we can look to the 60-minute fractal triangle here, right? We've got higher highs, we've got lower lows here, right? So if we go back to that,
Yeah, y'all.
this is what we see.
I'm trying to let him teach.
But to go back fractally,
My bad, y'all. I'll get into it. Let him teach.
we go into a 60-minute, we can draw off the recent highs and lows. Here's your triangle. Higher high, lower low, higher high, lower lows, higher high. There's also some sub in here, which we'll get to later. But then you can see it. And so if this starts kicking in, once again, as the range expands, you can see how here you had an inside bar come off here and come all the way back up, but then forms the shooting star to try and bring it all the way back down as this range continues to test both sides.
And you know, Moody just sees tweezers this morning.
The importance of an inside, outside, inside bar pattern, right? It's twofold here. First, the outside bar tells us that we have a broadening formation by definition on a fractal basis. Second, the inside bar represents a contraction in the volatility, a contraction in the range. Therefore, should the sequence of an inside bar, outside bar, inside bar, contraction, expansion, contraction, continue, the next move should be an expansion, right? And so why can we expect that? Because based on the fact that the second inside bar, or both of them for this case, both of them, right, is an actionable signal. It's formed at equilibrium. Therefore, we have every reason to believe this sequence will play out. Inside, outside, inside, bam, right, expand. So when the second bar goes in force, right, we can look for the low of the outside bar to be breached in this case, or the upside if it goes to the upside as the formation expands. So if you see this here, we go inside bar. We go outside bar by taking out both sides.
Mm-hmm.
We go inside bar again. Now, when this inside bar gets taken here or here, we're looking for at least this outside bar to get taken out. And in this case, bam, volatility expands, range expands hard, which then comes back up, and we'll get to that later. Triangle them back up. But for the this case here: inside, outside, inside. Something you want to know about. To identify and gauge the potential magnitude of the broadening formation, you look at the lower time frame again. In this case, the daily shows an inside-outside bar setup. If we look at the 60, you'll see the fractal triangle. Right, so what was it doing as it was doing that? Goes down, tight in here, slower, lower, low, higher, high, lower, low, higher, high. Your inside day. Right, goes down here, takes those out, comes back up. There's your outside bar, because this and that were lower and higher than these things. Then it comes into here and forms this, which was not higher than that high nor that low. There's your inside.
Oh.
You come in the next day, boom, triangle expands off that actionable signal down into here.
Why? Because that's a PMG.
We'll get to that in just a bit. The concept here, since broadening formations represent price discovery, that means they're attempting to go up or attempting to go down. The failed breakout of any range increases the probability of the other side of the range being tested, because they're going back, test the top, test the bottom, all right? So this is important to know, right? The probability increases the actionable signal is the triggering the initial reversal. So that's what we've just seen. We've seen it can come back into the range, but because we know that actionable signals are what makes price move, we look for these actionable signals to trigger back into previous ranges. All right, so that's why we're looking for the hammer countering the outside bar, the shooting star countering the outside bar. It tells us that we have an actionable signal going back into an expanding range. And should that continue, we have caught the new higher end of the range, and we will go test the other side. So in this case, the hammer is also a 2-bar rev strat, since it follows an inside bar. So if you can see here, once again, the higher highs, the lower low, the higher high, the lower low, right?
Swing high, swing low.
And you can see this range here, it goes hammer, which is also a rev strat because this was an inside bar. If this works, you've caught the bottom of the range here. Now potentially all the way back up at least to here. Now this is going to be subject to the change of time frame, right? And the exhaustion of this hammer. We don't have this hammer anymore after this is gone, right? But that's exactly what we're looking for. All right. So here, if you notice how the price was treated the following day, this is what I'm talking about when I talk about, this is an example of time frame continuity risk, is the daily and 60-minute participation group signals end with the close of each trading day. So in this case, we've got
a
hammer that goes back into the
Yeah.
previous range, right? You can see this here, lower low, higher high, lower low, comes back in off the hammer,
So now look,
jacks him right
for
here.
everybody that knows how to trade, you see the broadening formation? You know all he's talking about is this range right here, right? That's why I be fibbing shit. Bada bing, bada boom.
But the next day, since we are at continuity risk because the day and the 60 are over and that signal has exhausted, this is no longer in force, you're at risk of something like this happening, gapping right back down into you. All right, so that's why we want to have multiple actionable signals and be aware of the reason that swing trading can be more difficult is because you are constantly subjecting yourself to continuity risk. Anytime you hold something overnight, 2 of the 4 time frames are going to start over on you, and you are exposing yourself to that risk. And in this case, because you only have the daily hammer, you're at actionable signal exhaustion risk. The day is now over. The signal is now done, and then it can drop back in here, like so.
Oh, does that make sense? The last part, the day is now over. The day is now over. The actionable signal is done. So let me drop a 1 in the chat if that makes sense. If it don't, I'm gonna explain it. Oh, okay, cool. Drop a 2 if it don't make sense. Okay, making sense. Making sense. Making sense. All right, cool. I don't gotta explain it. Makes sense. Bet.
So if we can take a look at the reclaiming the range once again, and you'll see this over and over again.
Reclaiming range, shooting star, drop, shooting stars, drop. Oh my God, resistance, resistance, resistance. Three tests, tweezers, boom. Reclaiming, shooting star, reclaiming. That's what he's gonna talk about.
And you'll see this is not only shooting stars, but you can see the combination of inside bars as well. And so as you can
Nice.
see, as this went to higher highs, lower low, couldn't quite make the higher high, which is also a kiss of death, but makes the lower low, then makes the higher high again, then goes all the way back to the lows. You will see this type of action. This is how price discovery works. And when you look at the actionable signals, you can see here the inside bar jettisons to the highs. New time frame, continuity risk, drops back in, goes inside day. Inside day
New time frame continuity risk. So trade live candles if you want to make big bucks.
break, inside bar to the downside,
Don't listen to me.
comes all the way back down and takes out the
It's like
previous
why though.
lows.
I'm from
That's
the
price discovery.
Bronx.
Is it going to go break these lows and stay down there? Then it forms inside day.
Let me pause this so I can read it. But yeah, don't listen to me. I'm from the Bronx. You know, we're heathens. We don't know much. You know, they call us animals out there. So don't listen to us. But I do tell you one thing, Allah did come and speak to us though. So tweezers, shooting stars, and hammers are the main candles to look for or that you will see. Um, I like how you phrase that. Yes, yes. If you're conceptualizing it like that, yes. However, when you learn from me, I'm gonna just tell you tweeters and morning stars. And what I'm gonna tell you with actionable signals, I'm not gonna say like shooting stars. I'm gonna just name them actionable signals. I'm gonna say like inverted pin bars or hammers, right? So, real quick, just look at his chart because I can always find it on anybody's chart, right? This is like a hammer a little bit, right? So right now that you're talking about hammers, right, is the third one that you spoke about, hammer, right? So I'm also going to take that hammer off of the morning star, if that makes sense, right? Actionable signal is an inverted pin bar at the bottom of the downtrend, just like how you have an inverted pin bar at the top is going to be represented as a shooting star. You find them at the bottom of a downtrend, it reverses. And that's why I keep them inverted to myself. Why? Because I'm a bullish trader, so I don't confuse myself when I see these things, right? So that was an actionable signal. I'm gonna still take it off of that. And I can even explain everything that I do here. This is a tweezer bottom. This is a morning star. Just kind of cut off some of that wick so you can be able to see it. That's a morning star. If you're in a morning star, that means you're in a cup and handle. If you're in a cup and handle, that means you're in a full flat breakout, right? And if you're in all that, that means that you're in inverted head and shoulders. And I only speak about these patterns because people know them and identify with them. Even though I'm trading the price action, it gets to help you understand where it's like, oh my God, I could see this. Oh, I could potentially see it now. Let me just trade the price action because I'm seeing how it develops, right? I don't want to even get caught in a shoulder or anything of that nature. I want to be able to cast a directional candle to the out to break that outside of the range. So yes, you're absolutely correct. To simplify all that, I would just say tweeter bottoms and morning stars and look for actionable signals at the bottom of a downtrend or at the top of a downtrend. And it takes away all that terminology that you have to try to remember. That makes sense, Ariel, before I press play?
Yes.
All right, awesome. Oh, snap. Y'all on here doing y'all thing? Okay, okay. All right, let's go.
To go back up and start the new series higher. Momentum hammer, which then couldn't quite make the highs and drops all the way back in. Price discovery here couldn't make the higher high. So it's a lower high at that point. At that point, once it starts coming back into the range, now it takes all these guys out and goes inside day. So if this range expansion was going to continue, it would have gone inside day as a rest and continue lower. That's not what happened. This was an exhaustion of this selling. Inside bar equilibrium, momentum hammer, back slightly taking out the higher highs. All right. Now, if that breakout was true, it would have held. It's not what happened. Comes back in, shooting star back into this range. That's a problem because we know that this range is getting bigger. Shooting star, boom, comes down, tests the lows, goes inside here. Now, if it was going to hold here, it would have gone inside and back up, but that's not what happened. It goes inside down, takes out the lows here. And we don't have the clean actionable signal down in here. You had a momentum hammer here. Once you have reclaimed all this stuff.
And that's when I'd be like, dang, I'm fired. Because drop a one in the chat if you can identify with the inverted pin bar down here and the inverted pin bar down here. That's the inverted. That's this right here. Look. And you can drop a one in the chat if you see. If you don't drop it. Because I don't want you to get confused, though. And go on these things. Let me just go back. Let me just go back. Wasn't it right here? Yeah. Where was it? Right here. Bottom of downtrend. Inverted hammer. Morning star. Bada bing, bada boom. Now let's go back to the video. Bada bing, bada boom. Bottom of a downtrend. Inverted pin bar. Morning star. Bada bing, bada boom.
To start pulling back here, and now you can see
that was. I still consider him a mentor, even though he's not here, because I still learn from him. However, that's how you stay a student to your mentor. Why? Because I don't know everything that's right. He don't know everything that's right. However, when you're doing your due diligence and you're staying on top of your game, you're able to catch things like that. And that's what, those are them glimpses of seeing the future and like, look at who I am. Okay, cool. Let me keep this repetition. Let me stay on this frequency so that I can be able to continue to clean my eyes, see things, and execute on it.
finally the range expansion ultimately
Finally,
results to the upside.
inverted.
But if you don't know about this stuff, you'll never catch this, right? As the broadening formation continues to grow, right? This is what we're looking for. Get bigger as the range continues to expand. That's the importance of understanding how these broadening formations work. If you get caught in one that's too tight, just forming, that's when people get chopped up. And oftentimes you will see that as an inside bar is forming.
No, we don't say the market's choppy, but we do say people get chopped up.
So once again, very, very important. Any actionable signal that reverses back into a previous range represents a possible failure of price discovery. This creates the potential for the broadening formation to test the other side of the range. So when we're looking at these actionable signals, where are they occurring compared to the previous range that we know about? All right? Are they confirming a breakout, or are they confirming back into the previous range? Right? That's how we identify which signals we can take. Otherwise, it would be very simple. We would take every inside bar, we would take every hammer, we would take every rev set. We don't do that because this is showing us how we're going to use these to gauge magnitude combined with time frame counting. When we put all these together, right, that's the real importance of using all three. Oftentimes people come to me after hearing just a few things about actionable signals, and they believe that they can trade successfully just knowing that. Right? This is the difference. What range are we testing? What are we reclaiming? So at this point, I'll conclude video 1. Once again, we're going nice and slowly. If you're confused on the first 2 parts, I highly suggest you go back and have a full understanding of time frame counting.
And that's basically the end. Well,
knowing what these actionable signals look like as we continue.
And Ariel, I would tell you too, even if you don't want to go to Sarah Sniper, a lot of people can't learn from Rob because Rob is not going to put out a course or put out like his whole strategy on just YouTube. He's just going to give you a chart analysis and things of that nature. You got to be able to identify with that. Like when someone's going to teach you, or they're just going to give you some type of analysis and things of that nature. When you're that helps when you can identify that, because then okay, I look at this person for this, or this person for this, or I look at this person to learn. I can look at this person to grab a trade, things of that nature, right? However, you can start from day one of this course and you're going to understand everything because he breaks it down from the beginning all the way to the end and any small little things that you need to know. And then you have me overviewing the video and doing things like this. So I would say you'll learn it quicker and better through his course and what I'm doing with his course. Let me stop this recording.